Hey everybody, welcome to the garden. I hope you're having a great day. Shout out to the lemon and lime lovers and everybody in between. It's time for the Ichimoku basic strategy video part 2. Okay, so unlike the first part, this video is going to go over another basic strategy that Ichimoku provides. So if you want to watch the first part, which I suggest you do because I do go over the components and the mathematics behind it, at least lightly, and what each component does individually and how they kind of come together. I do go over that in the first part. I'm not going to do that again in the second part, so you definitely want to check that video out. The link to that first part video will be in the description below, okay? So in this video, we're going to be going over a strategy known as the TK cross. Okay, so let me just hide the candles real quickly, and let me get rid of all the other Ichimoku components that are not part of the TK cross. Again, the other components do define how we take these trades, but this is our trigger, right? So as you can see, you have the Tenkan-sen, which is the blue line here, and then the Kijun-sen, which is the black line, and the TK cross is a bullish or bearish TK cross. In this case here, you'll have a bearish TK cross because the Tenkan-sen broke under the Kijun-sen, and then right here is a bullish TK cross because it broke above the Kijun-sen. Okay, very simple, very similar to like a moving average strategy, like death cross, golden cross, stuff like that. But if you watch the first part, you'll understand that what these lines are measuring is very different than just the average price, right? So you want to definitely check out that video if you want more details on that. But yeah, that's exactly how you would technically use this stuff. But we do have to use the other components to let us know what's optimal, right? What's the correct way to take these opportunities? Because if you have a bullish TK cross under the cloud, well, if you're using basic strategy, that's incorrect, right? You won't take a long just because the Tenkan-sen crossed above the Kijun-sen while you're below the cloud and while price is below the lines. You want a couple parameters to be checked off. So in this case, let's say, as we see, we broke down and now we're having a separation. Technically, the bearish TK cross happened all on this big candle here. Okay, so whenever you see the Kijun-sen and Tenkan-sen kind of as one line, so like this, it's not that the Tenkan-sen disappeared, it's that the move was so there's so much velocity to that move that they're now overlapping. You can consider that a cross, in my opinion. Okay, this is a cross in my opinion, but it all happened in that one candle here on the daily. All right, so if you want to use the strategy on one time frame, on the daily time frame, you can. All right, you would take a short right here and then you would wait and see if there's continuation to the downside. In my opinion, I think the TK cross strategy is best used when multiple time frames are used, because this strategy, it's all about continuation of trend. Whereas the first strategy I showed you, the Kumo breakout, is trying to grab the beginning of a defined trend. All right, so this strategy is definitely more suited towards looking for continuation or looking for an entry of a defined trend, whether you missed the initial entry or whether you're looking to double dip. Okay, so in this case, you're looking to see more downside because the daily trend is pointing towards more downside. So now you don't have an entry here per se. You could enter here, but you don't have the most optimal entry. This is when you want to use a lower time frame to enter. So if you're looking to follow the daily trend, I think you want to go either the 4 hour or 1 hour, but never lower than the 1 hour. All right, so in this case, let's go down to the 4 hour first, see what it looks like. So as you can see in the 4 hour breakdown, but there's also no TK cross here coming anytime soon. All right, we are clearly in a downtrend, but we're going into a consolidation on the 4 hour. So what we're seeing is price broke above the Tenkan-sen, the Kijun-sen's coming down towards it. So we're going into a tight consolidation, at least for a while, in the 4 hour. And now let's go to the 1 hour. And the 1 hour, interesting enough, broke through the cloud. All right, it's under the line, so it's under Tenkan and Kijun, but it broke through the cloud. Lagging span is above the candles, and to me, this is a prime setup to wait and observe the 1 hour to give us a bearish entry. Because even though this is, it's not bullish, but it is not bearish, it's in a consolidation, what we're seeing is on the daily time frame, this is still bearish overall, right? And this is what we're targeting to get into. So let's go on the 1 hour time frame, and we have to be patient. We have to wait and see if we get an entry to go short. So what we want to see is similar to what the strategy is in the first video, is a Kumo breakout on the 1 hour. You know, obviously we want that bearish TK cross as well. Okay, so bearish TK cross happened here, having a bearish cloud flip, but this is not enough. It's not enough because this is still within the range. As we can see with the Chico span, the green line trading within the candles here. We want a decisive breakdown like that. So this would be a decisive breakdown, and this would be the place where I would take the short. Okay, so I would take the short here. So let's go short off that 1 hour closure, and now you have a choice. You could either target risk at the Kijun, which is right here, which is about 1.27 risk. I would go higher. I would target the stop loss to be either here above this flat level here, this minor high pivot, or towards here, towards this high pivot on the hourly. This is where I would go. The reason why is because I'm chasing, or I should say I'm seeking to follow the daily trend, not the hourly trend, the daily trend. All right, and the daily trend to me is showing downside. So let's see what happens as this starts to mature out. So what you just saw, because of how TradingView calculates their replay, you just saw how this daily candle closes. Okay, so we got in here, and then that same daily candle closed all the way down here. So a beautiful optimal entry right here. Okay, so obviously depending on how you are looking to take your profit, you may have taken some already off. You may just be trailing your stop loss with the Kijun, whatever. You know, this is all about entries. You can define how you're gonna, control your risk and take your profits. All right. So pretty much because we got on that hourly level, now we're just following the daily trend, and we got in at a very nice level. All right. So this trade obviously worked out pretty well. So if you see a strong trend on the daily, but you miss the initial beginning, you can use smaller time frames going all the way down to the 1 hour for that entry, right? For this entry to get in, to show that smaller time frames are now starting to flip towards the larger time frame trend to the downside. Okay, so and that's how it looks on the hourly after the couple days went by. So obviously a beautiful trade. And this is a good example of how you would look for a downtrend, a defined downtrend entry when you missed, the initial entry. Okay. Now let's look for an uptrend one. Let's go far into the future. Let's go to let's see. Let's go into like 2020. Yeah, they'll do that. So let's move forward here into 2020. So bear with me 1 second. I'm just going to end the replay and then just go backwards. I want to find, here we go. So there's like a really strong trend that, like you would have issues trying to enter, right? It would be great if you entered at the Kumo breakout down here, right? Then you're just sitting pretty. But what if price was over here, right? Let's go to, let's go here, right? Let's say price is right on over here. I want it to be like strong looking because that happens more often than not. So yeah, it'd be very hard to enter here, right? I mean, if you're seeing price this high, entering here would pretty much be chasing. So this is where you would need another confirmation to find it optimal enough to enter here. So you would obviously go to the lower time frames. The daily, there's no bullish TK cross in sight. So now we'd look for the 4 hour. Okay, 4 hour, very bullish looking. Again, not really much of an entry opportunity here. You could try and play the breakout, but that's not what we're looking for. We're looking for a bullish TK cross like that happened down here, but we missed it. So let's go down to the 1 hour. So 1 hour, oh, beautiful. So now 1 hour, as we can see, looks pretty bullish, but we're going into what looks like a bit of a range of consolidation. But that's okay because the daily trend looks extremely powerful to the upside, right? Because on the daily trend, we have everything pointing up. Everything's pointing up. So that's what you want to see. So now the 1 hour, we want to see if we can get an entry with a bullish TK cross, Okay, and obviously we want the Chico span to be away from the candles going up, and we would love for the cloud to be pointing up as well. So we are going to let time go and see if we get that opportunity. So there's a bullish TK cross, but again, the Chico span is still within the candle. So now what we should be targeting is a breakout for the Chico span, and then obviously what I always like to see, especially on the smaller time frames like the hourly, is the Senko span B, that's this thick black line right here, and the Kijun right here pointing up. Okay, both of those pointing up in the direction you want, and that will probably happen if we break this high pivot level here, maybe here, but most likely up here. So let's watch. Okay, so this is a place where you could take the trade. Okay, again, the lines aren't pointing up, all right, but clearly if you watch the daily time frame, you see the trend is very powerful. We're attacking this pivot. You could take it here. If you want to be more conservative, you could wait. I would take it here. I would definitely take it here, just because the risk looks great. Okay, you could use the Kijun. This is a little too tight for me since I'm looking to follow the daily trend. I would go below this swing low right here, right? So right around here. And now let's see what happens. So now, because we broke this level, you're now seeing all the lines break through. So you could have waited for this candle as well. Okay, just whatever you're comfortable with. And now, because we are clearly in the position, let's go to the daily time frame now, because that's what we're following. We're not following the hourly trend anymore, but we're still using the hourly risk. Okay, it's very important. We're still using the hourly risk, not the daily risk. And as you can see, this is how the hourly candle ended up closing, which is very nice. So it ended up closing for us, if you were in this trade, plus almost 9%, right? So that's, again, another example of a beautiful optimal entry in regards to how you would use this. But look what happened here. So you end up getting stopped out here, which is pretty rough. That's pretty rough. It's going to happen. It's pretty rough. Unless you had, depending on your strategy, you may have taken profits when you were up, almost 20%. But if you did have your stop in the same place, you definitely would have gotten stopped out here. Okay? So you want to keep that in mind. But it does not mean the trade's over. So what that does mean is you could now be looking for another re-entry. So let's see how the hourly looks once this updates here. Hold on. Let's see how the hourly looks, especially after that wick. That wick happened. Okay. So this is where the wick happened on the daily, right? So let's go right here. So you got stopped out. Maybe you took some profit, maybe you didn't. Let's say you didn't. You lost 3.4%. No, that sucks, but not the biggest deal. But guess what? You have another entry here. The daily time frame is bullish. It's bullish, and you're convinced it's bullish. So now you're looking for another entry. So you can go back to the 4-hour, or which the 4-hour gives you that TK cross to the upside, or you go to the 1-hour and you look for the Kumo breakout. In my opinion, I would have used the 4-hour this time. Okay, the 4-hour would have worked much better this time, giving you a little bit more confirmation. So let's go back here. Oh, didn't do that right. Okay, so you got stopped out here because, as we saw, that daily candle had a pretty strong wick to the downside, but then got bought right back up. So now you're on the 4-hour, and now you're going to be waiting to see if you get that bullish TK cross. You do have the Chico span well away from the candles. Everything seems fairly strong. And now here you go. Here's your entry. So you'd go long again. Because the daily trend is still very powerful. And in this case, you would use, in my opinion, I would use the Kijun. Okay, you could use a swing low if you're more comfortable with that. It's a little bit more risk, like 12-13%, or you could use the Kijun. I think a 9 to 8% risk is good enough. And then you go back to the daily time frame. And now again, we're following the daily trend, but we're still going to only be using the 4-hour risk. And then it's breaking up. And depending on your strategy, I mean, you should have taken some profits here, or you just get stopped out again. Again, it all depends. I'm not going to tell you how you do your risk and such, but this is how you want to definitely be looking to, enter defined trends to one direction. You want to use smaller time frames to get an optimal entry point. And now we're going into what looks like a bit of a range here. In my opinion, if you got into this trade, you were all the way up towards, at the high, almost 24%. Most likely you took profit, put your stop loss break even. At least that's probably what you should have been doing. But that's okay if you didn't. again, you're going to get more opportunities to enter again. So now let's take a look at the daily and see what happens as this plays out. So on the daily time frame, what we're seeing is clearly we're in an uptrend still. Lagging span is still within the candles, but we have potentially going to be seeing a bullish TK cross on the daily. And this is where you can take a TK cross, bullish TK cross, on a single time frame, right? So we'll take it right here. Your risk is going to be a little bit higher just based off of, the time frame's larger. So you're risking about 11%. And now we'll see what happens. There you go. You got price break up. So very good. So again, you could be trailing your stop if you want, kind of like how you would be doing back here, but you would get stopped out sometimes from, these heavy wicks to the downside. Or you would be having like levels where you're taking profit off periodically as it goes higher. Okay. So as you can see, this strategy to me is more about just entering in a defined trend, mainly off a lower time frame entry, but you could use it all in a single time frame as well. Just be prepared if you try to do it all in one time frame. A lot of times the entries won't be as optimal, and a lot of times you'll have to wait a lot longer as well. Okay. And there you go. I mean, this trade obviously worked out very well. Let's say you didn't move your stop loss or anything, you just got stopped out. This was an 8.8% loss, and this was about, what, 3.4. So we could safely say you lost about 11%, maybe like 12%ish, a little bit higher, give or take. And so far you're up this trade at the high right now. You're up 43%. So obviously you've made back a ton of your money. I would assume you'd probably be taking profits around here as you've gone up higher. Your stop loss is probably in profit now. If you're trailing the Kijun, your stop loss is now right around 8.5%, 9%. Okay, so if you're trailing the Kijun, your stop loss would be just under 11.5 or 11.6%, and at the high you were up almost 50%. So you would have made your money back and then some, clearly, as long as you were taking profits here and there, or if you were using maybe the Tenkan-sen as your get out point, which right here, that would have been a bank-in of about 32%. So it all works out in the end. As long as you can define the daily trend clearly, you can use these other time frames to get in. And that's pretty much all that this is. Okay, that's all that the TK cross ends up being. You just want to use the smaller time frames, be patient to follow the daily trend. All right, and again, like I just showed, you could just do it all in one time frame, but I think I showed the advantages of using a smaller time frame. And that is mainly about it for the TK cross. I do have a couple other videos with Ichimoku that I'm going to be releasing in the near future. But these are the two most basic strategies of Ichimoku. Okay, they're by far the most basic. The Kumo breakout, in my opinion, is probably the best for basic strategy. The idea is that you're targeting a breakout in all the candles, all the components of the Ichimoku indicator, giving you the same an indication. We're all going up, we're all going down. I think this gives you the opportunity to get into these major moves like this, right? It doesn't happen all the time, but it does happen more often than you probably would think. But then also looking at the TK cross in a way where rather it's more of like a continuation, where it's giving you an opportunity to get into a defined trend where you've missed it, or you're just looking to get back into it after you've taken profits from down here or something. That's a healthy way of using it, in my opinion. Okay. But be wary, TK crosses will eventually, they will betray you, because if you're coming to the end of a trend, so let's see if we get near one. Here's a bullish TK cross. Let's see if this works out. Once you get near an end to a trend, then it's going to go the other way. And yeah, so this is not going to work out, at least not optimally, because you're getting in around here. You only got up maybe like 10% at most, and now you're starting to show signs of a trend ending. See, yeah, it starts breaking down. Okay, so it would have probably failed unless you took some meager profits like very quickly. So you were nearing the end of this particular trend. All right, whereas if you're looking at the Kumo breakout strategy, you may be seeing an opportunity to go short here, right? So you have candles breaking lower, it's under the lagging span here, bearish cloud twist. We couldn't go low, we couldn't go short here yet because it wasn't a bearish cloud twist yet. But now if the next couple candles start breaking under the cloud again, we could probably look to go short. Let's see. Okay, you did have one here. You did have one here. So you probably could have taken the short right here. And then let's see how that would have worked out. May work out, may not. I do have a bit of hindsight. I do know Bitcoin will go higher because I've looked, and I know it gets towards like the 60,000 mark. So you're already in decent profit if you took the short here off the daily time frame. And now your stop losses, even if it does go the other direction, you're talking about under 3.5% risk. Okay, so the trade would have worked out great, even though we all know Bitcoin ends up around 69,000 or something before the major drop off. So this trade would have worked out as well. And again, this is why Kumo breakouts, in my opinion, do end up working better, in the sense that you end up getting much larger moves in your direction. But the win rate, you'll have to backtest it yourself. I've had mixed results. The TK cross win rate can be really high if you're optimal in your entries with the lower time frames. It actually gets really high. But if you're doing a single time frame, or you're not as optimal in your entries for lower time frames, the win rate can drastically be a lot lower. Whereas Kumo breakouts are a little bit easier to measure the backtesting results. Again, they can range depending on the assets that I've seen, anywhere from like 44 to 52%. And for stuff where you're going to have a profit factor of, we're talking anywhere from 3 to 8, that's massive. Like that's really, really good. Really, really good. You don't really need a super high win rate if your profit factor is going to be 3 times your risk or 8 times your risk a lot of times. So, and then obviously if you do what I do, or at least did, trailing your stop with the Kijinsen, you get stopped out here and there, but there are times where you might start with 10% risk, and then you end up with just a 1% risk, and you're up 40 or 50%. Like, it's one of those things where that's plenty of that you can't get more comfortable than that with your risk and reward. Okay, so you do want to, if you are interested in this, you do want to kind of backtest this yourself, mess around with it. But the bullish GK cross is definitely a decent strategy. Just be wary. It doesn't always work, and you do have to keep in mind of structure. If you're seeing the end of a trend, but you see a bullish GK cross, or bearish, depending wherever the trend is, you want to be wary. It may not work out. Okay. And yeah, I think that's it for now. The next video will be about a reversion strategy with Ichimoku. So this will be the first strategy I show you that you can use Ichimoku for reversions. So quickly, I've mentioned that Ichimoku attempts to show you when ranges or consolidations are happening. Well, there's a way to trade Ichimoku, and when you recognize that's the structure, to trade a range. This is more of a more moderate, intermediate way of using this indicator. It's not a basic strategy. So the next video will be a more intermediate strategy with Ichimoku, and it mainly consists of the Kijinsen. It's a very good strategy, especially if you want to use Ichimoku on lower time frames. Again, you use the daily time frame as your structure, but it's a very, very good strategy. It tends to have an extremely high win rate when done correctly. And then after that video, we're going to go into much more advanced stuff. We're going to go into what's known as Ichimoku wave theory, time theory, and price observation theory. And it's much, much more advanced than what I've showed you here. So, we're going to have a string of Ichimoku videos as the time goes on. So if you are interested in this indicator, be on the lookout for that. Yeah, if you're not familiar with me, I do a bunch of different things. I try and do recap videos. I don't do them daily. Sometimes I'll do them, sometimes I'll do them daily. Sometimes I'll do them bi-weekly. Sometimes I'll only do 2 or 3 a month. I'm not looking to make videos just to make videos. I want the recaps to actually have substance, and to have actual updates of when markets change. And sometimes the markets stay the same for quite a while. But if you want to follow my observations, my ideas, definitely give me a follow, subscribe, like, share, the whole thing. And I also do a couple services. I have a call out service, $15 a month, and then I have a day trading service. It's about $125 a month. That also allows you to join my copy trade account as well. I have a Patreon that you can see all the details of these services right in the link, right in the description. Link is below. Okay. All right, everyone. Thank you for stopping by. We'll talk again soon, I promise. And remember, be patient, be vigilant and be nimble. Love you guys. Take care. Bye.